The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Cho with Sylvia Mara, and these are your headlines. President Trump blinks, announcing a 90-day pause on his so-called reciprocal tariffs and spurring a historic rally on Wall Street.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, They were getting a little bit yippy, a little bit afraid, unlike these champions, because we have a big job to do. No other president would have done what I did.
Asian equities joined the rally, Japan's Nikkei and Taiwan's Taiex leading the charge, while European futures also point to significant gains.
Chinese equities also move higher despite Trump dialing up levies on the country to 125% and excluding it from his tariff reprieve. As he says, he still expects to strike a deal with Beijing. A bargain in Berlin. Germany's next Chancellor, Friedrich Merz, unveils a coalition deal with the center-left Social Democrats while addressing the U.S. president directly.
The key message to Donald Trump is Germany is back on track. Germany will fulfill the obligations in terms of defense, and Germany is willing to strengthen their own competitiveness.
Volkswagen earnings plunge amid global tariff uncertainty, with Europe's largest car maker missing forecasts by a wide margin and admitting it's too soon to know the full impact. Were you feeling a little bit yippy? I think that's the question. Trump put that out yesterday, that we were all feeling just a little bit too nervous, which is why he blinked. A couple of talking points. Thank you for the insider trading tip from the White House. Who would have thought we'd get one of those? Great time to buy. Tweeted out, or that posting yesterday on social media. The role of Scott Bessent here, the Treasury Secretary, in finding that off-ramp. And we were all talking about whether there could be an off-ramp. The other big points that Trump's seemingly willing to tolerate a recession, but not a depression. We had those moves through the market yesterday. What becomes of China? Those are my big talking points this morning.
Well, my question is also the role of Jamie Dimon here. The fact that he went on Fox News and he addressed the concerns around the recession for the U.S. economy, that also seemed to have played the role here. And then ultimately the president admitting to some extent that what we're witnessing in the markets, particularly in the bond market, did contribute to his decision to pause these tariffs for 3 months.
Yeah, media hugely relevant at this moment as we talk about a role of that interview with a former colleague of ours over at Fox. Let's just get into some of the big moves and what transpired. Donald Trump has reversed course on one of the most controversial trade policies in U.S. history, announcing a 90-day pause on what he calls reciprocal tariffs for countries that didn't retaliate to his levies. That means duties are still in place for China, which will now pay tariffs of 125% in the latest step in the country's trade war. This is what the president had to say about his decision.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, They were getting a little bit yippy, a little bit afraid, unlike these champions, because we have a big job to do. No other president would have done what I did. No other president. I know the presidents, they wouldn't have done it. And it had to be done. What was happening to us on trade, not only with, if you look at it, not only with China, but China was by far the biggest abuser in history, and others also, but somebody had to do it. They had to stop because it was not sustainable. Last year, China made $1 trillion off trade with the United States. That's not right. And now I've reversed it.
And meanwhile, Treasury Secretary Scott Bessent claimed dozens of countries have come forward to negotiate.
We saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as I told everyone a week ago, they're in this very spot, do not retaliate and you will be rewarded.
So let me run you through the roller coaster really that we witnessed in U.S. Equity markets yesterday. We started the day on a downward beat, investors still digesting the impact of tariffs. But then throughout the day, the narrative changed completely. We actually saw at the end of the trading day, the Nasdaq posting its best day since 2001, the S&P its best day since 2008. We saw a massive rally in U.S. equities after the announcement from the White House that they were pausing these tariffs for 3 months, for 90 days. And on top of that, very much the willingness from investors at the stage to go back into the markets and to essentially take some of the enjoyment from the fact that for the time being, these tariffs are on pause. But it's important to keep in mind the narrative as well from the point of view that the 10% tariff is still in place. So we are seeing a better case scenario from what we had 24 hours ago. But nonetheless, there are still some pressures here on the trade front. I also want to run you through what we have witnessed and what we're witnessing in terms of the bond market, because this was also one of the points that seemed to have tipped the president into announcing the pause in these tariffs. Looking at the 10-year Treasury yield has moved lower. At this stage, we are at 4.28%, but it has been a roller coaster also in the bond market. Just to give you an idea, the 10-year Treasury yield hit a high yesterday of 5%. So we have come down from those levels. Let's see what we will witness throughout the rest of the day. In terms of the Asian session, let me show you that too and see how Asia is reacting to the announcement of a pause. And as you see on your screen, we continue to see that rally also taking place in Asia. So continuing that momentum that we witnessed on Wall Street yesterday. At this stage, the Nikkei 225 up almost 9%, the Hang Seng up 2%, and the Kospi in South Korea up about 5% at this stage, Karen. And worth keeping in mind, of course, that South Korea and Japan were already ahead of the curve in terms of potentially negotiating a trade deal with the United States. No doubt that the announcement of the pause has been taken as a good news from the market.
A historic day on Wall Street yesterday and spilling across while the markets from Europe to Asia today. But what jumps out, we go back in history and we compare the Nasdaq to the dot-com bubble. So in terms of the rally, we've compared the S&P 500 to the greatest jump that we've seen on markets since the financial crisis. And for the Dow, it was the best rally since the COVID bounce. So really going back over history as we talk about comparables here. When it comes to the messaging from the White House, I said this at the start of the show, that it was just extraordinary to have that messaging from Trump. Be cool, okay, that's fine, take a chill pill. But then to say this is a great time to buy before there's a major announcement, that is just extraordinary, because you can imagine in most financial circles, this is not the way things transpire. I mean, you think about all the Chinese walls at banks, if there's a deal happening on one side, not to tell the other side of the bank. Just extraordinary that we had that sort of messaging from the White House. In terms of Scott Bessent here and the negotiations he had, it felt as though he was taking a string of phone calls from Wall Street, but it was those conversations that really carried some weight over the weekend. But then a messaging yesterday in a sit-down lunch with Charles Schwab, apparently, that Trump had, but also with Gretchen Whitmer from Michigan, telling about the pain that was actually being felt there on the ground with some of the workers as tariffs were rattling through the automotive industry. So two big markers here, financial industry and heavy industry, telling the White House that these tariffs had gone too far.
According to Scott Bessent, this was the plan all along. And he was very clear yesterday saying, what we announced was a ceiling for these tariffs. But if you're in the markets, the damage has been done. And several investors have been making the comment since the announcement of the pause that actually the confidence on the U.S. government has been impacted. And that's, of course, one of the consequences going forward. When you think about positioning going forward, you're going to be thinking that you can't be sure of what the White House is going to do next. So that is also having an impact. At the moment, we have on the screen European futures. We are on track to see more positive trades also over here in Europe. This after what was a negative session yesterday. We saw the Stoxx 600 ending the day down 3.5%. But of course, the announcement of the pause in tariffs came after that. In terms of what we are witnessing also in Asia, I mentioned earlier today, but let's get out to Lin with more on the Asian market action. Lin.
Yeah, hey Sylvia. So after a very painful few sessions, we're seeing a collective sigh of relief for Asian markets. Let's kick it off with North Asia and particularly Japan, because we saw a huge bounce back there. The benchmark Nikkei 225 bouncing back by more than 8% and outside now of that bear market territory. And it's a lot of those sectors that would have been impacted by those tariffs as well as growth concerns bouncing back, like your electronics, AI-related names, as well as the banks. So Sony, Tokyo Electron, SoftBank Group, all up by double digits today. Also, we saw that the Kospi is now out of bear market territory as well after it rallied by more than 5%. And the Taiex is actually the best performer across the region, up by close to 10% today. That heavyweight there, TSMC, almost limit up 10% in terms of its gains. And of course, that's despite the fact that the semiconductor industry at the moment is exempt from these tariffs. We heard from Taiwan's officials saying that they're hoping that this pause on tariffs will give them that time to negotiate with their US counterparts as well. In terms of the Southeast Asian markets as well, remembering that this was really the area that benefited from that China plus one strategy. And also some of these markets, some of these countries were hit by the highest reciprocal tariffs. They have also bounced back substantially today. Keeping in mind, of course, Vietnam, 46% was that reciprocal number. That index there up by more than 6.7%. Over in terms of that greater China region, now they did not benefit, of course, from this pause in tariffs. In fact, we know that there is this uplift of 125% tariffs on China as well as on Hong Kong. But we are seeing some gains, albeit much more muted. We know, of course, that the authorities there have been speaking about stepping up in terms of measures to stabilize the markets. There is talk of the national team, the so-called national team, being involved as well as ramping up expectations that we could get some monetary easing as well from the central bank. And I just ended as well in terms of looking at that renminbi, because of course so much focus on whether or not there would be some sort of a devaluing of the Chinese yuan to compensate for these higher tariffs. And today we saw that the PBOC has lowered its midpoint again for the 6th straight day to a fresh 19-month low. And we're seeing that dollar yuan, that onshore rate at the moment, sitting at 7.3422, guys.
Lynn, thank you for the update. And let me now bring you up to speed with what we are hearing from the European Union. The bloc has rolled out retaliatory tariffs is rolling out retaliatory tariffs from next week, I should say. This is after countries approved more than 20 billion euros in levies on Wednesday. They will impact goods ranging from metals to poultry, according to a draft document seen by CNBC last month, and they're reportedly calibrated to hurt Republican states the most. That's according to the Washington Post. But in the last few hours, the Financial Times has reported that the bloc is also mulling whether buying more gas from the U.S. as a way to parry the tariff threat after the president suggested the bloc to buy $350 billion worth in order to reduce its trade deficit. And I'll just highlight a bit of color there. One of European officials told me yesterday, Karen, that 26 member states voted in favor of the tariff list. One country voted against it.
Hungary?
It's a very good guess, I think. The source don't want to confirm, but it just goes to show how the internal politics are playing also at this stage.
Yeah, let's get to Thanos Papasavas, who's founder and CIO at ABP Invest. Thanos, it has been a roller coaster, and you put a note out on the 7th of April saying pause of NASDAQ 100. I know that you're not a trader, but everybody's a trader in this market, at least having to move portfolio positions around. So why did you think those were buy signals? And you must have been celebrating yesterday after that huge pop.
Thank you, Karen. You always have to be humble in these markets, generally over experience and cycles. So it was a good call indeed. And I think the key point is that we had, given the tumultuous weeks, we had an extra process meeting on Saturday morning. We thought we need to have a meeting when markets are not open just for us to think it through. And we basically felt that this unpredictability that President Trump brought can go both ways, a left tail event or right tail event. There was a 25% correction. Valuations were more attractive. We had already reduced a lot of the underlying risk in our sort of thought in our portfolios. So we thought if we're going to do it, let's have a chat on Monday. On Monday morning, we decided we were looking at Nikkei, it was oil, VIX, NASDAQ, and we decided to go for the NASDAQ 100, turning positive. Why? Because it represented tech, which has been at the upper end of our scoring, but because of valuations, we'd kept away. So it's so far it's been good.
That statement can run a little bit further, I think, that the unpredictability goes both ways. And the reality is, all the conversations we've had around the set in recent weeks has been about European investors or international investors now trying to position across in Europe more so than just predominantly in the United States. So even though we've got that pop from a low base stateside, it feels as though the long-term trend may still be spreading the bets. What does that mean? What sort of damage has Trump wreaked on that US exceptionalism story?
Well, first, in terms of the Europe, I agree with you, and our preference had been for a couple of quarters recently is for Europe and the UK and China versus the US. So we see that there is a real structural change in Europe. It's getting its head out of its sand, it's dealing with the situation. So that is very much the case. Now, in terms of the US and Trump, this unpredictability will create some uncertainty. It will change some of the value expectations. But I think the markets will be relieved to see that we have identified the pain threshold which the president has, and therefore some sort of line in the sand which he may not be comfortable to go over.
I'm also wondering about where do we go from here? You're suggesting there that one of the consequences from this change all the time in terms of tariff positioning is the fact that we just don't know what's coming next. So where else can you seek protection for the portfolio at this stage?
Okay, so in terms of where do we go from here, I think if we were looking at the underlying economic outlook for the US economy, if we were to put aside this uncertainty around tariffs just for a second, the underlying US economy is very resilient. The employment numbers are super strong, level 1 indicators are fine, the leading economic indicators are good, the sentiment is fine, the corporate sentiment until the tariff. So we are comfortable with the underlying fundamentals of the US. It just so happens that the European fundamentals have had a slight positive improvement and therefore a shift more towards that. In terms of a portfolio, we always find that it's prudent to be diversified, and we also include bonds, and we do have a positive feeling for treasuries, for bonds, for gilts, partly because of their positive real yield, partly because of the diversification in times of volatility.
So where do you stand in the debate about whether we're going to see a US recession?
We, up until recently, again with the Trump events, our probability of a US recession was only 20% for the next 3 to 4 quarters because of that underlying resilience. The fact that Trump instigated this uncertainty, as I just mentioned, could have gone both ways. It was very difficult for us to time the probability and the change of that, and hence why we turned positive the NASDAQ on Monday. And still, however, and I think this is crucial, and it sounds ridiculous even hearing it, but we still believe that the Fed could be raising rates in September, which has been a contrarian call of ours since December of last year, assuming the resilience of the economy and the underlying inflationary pressures coming through. We've got 5 more months to see what the inflationary pressures are, and if it is rising with a resilient economy, I think the Fed will have to raise rates.
Well, that gets difficult, doesn't it, if we're talking about a hawkish Fed, and that's been one of the prospects as we saw the outing from Jay Powell the other week. So what we've got, a market yesterday where it felt as though the cash was floating in the ocean. You just got a net and you just scooped it up, and it was very easy to make money in yesterday's market. How much further does the market run from here to the upside if we are going to hit a wall potentially of rate hikes down the track?
Well, just to adjust a little bit on that, it's not necessarily a wall on rate hikes. We may see an increase in interest rates just for the Fed to signal to the policymakers, guys, be careful because what you're doing here is inflationary. If we see a full pullback of the current developments and inflation expectations start to ease, then the pressure will not necessarily be as strong. So it's the US underlying economy which is going to be the resilient.
So what we've got at this point, still retaliation with China. So that is not coming off the table just yet, but we're still left with the 10% baseline tariff. How inflationary is that? If that's all we were left with, and that could be a scenario, what would the Fed have to do in that context?
Well, it depends on if the US economy remains resilient, plus we have some inflationary impact from the tariffs, then the Fed can still tighten rates in September, but does not have to go into a full tightening cycle because we are already in a contractionary environment.
So let me ask you about the ECB in that context, because we've also seen appreciation of the euro in recent times. A lot of people questioning whether the dollar is still a safe haven to some extent. What do you think we should expect from the ECB this year?
So, in fact, the question on the dollar and whether it's a reserve, I do believe that the dollar is a reserve. And if we were to see a second leg lower rather than this first leg lower, I believe that the euro would have weakened and the dollar appreciated, similar to the GFC. So if it was a serious correction rather than just what we had seen, I think the dollar appreciates. And what we did see over the last few days is the Swiss franc appreciating significantly. But going back to your question in terms of the ECB, I think the inflation environment in Europe is Goldilocks. It cannot get any better. I don't believe we can go anywhere near the 2%. 2.5% is probably the best that we can get. And therefore, I'm not sure if the ECB really has the capacity or ability to cut rates much more from here.
Can I ask you about final trades to think about at this window? Because what we had yesterday, oil prices moved up about 4.5%. We had a big jump in the semiconductors, 17%. FANG plus stocks up 10%. Banking stocks up more than 7%. Technology up 14%. So everything jumped. What would you do at this point if you've been watching this market, you've been sitting on the sidelines? What would you do at this stage?
Well, I think what's important to see is, first of all, the overall diversification that one would have in the portfolio, and therefore, what is their time framework? So if we are expecting the overall resilience of the economy to remain, then we would be buyers of risk. Now, whether you buy today or whether you wait for a slight correction is very difficult, and therefore, in my view, it's always good to break it down to 3 or 4 chunks and say, okay, I'm going to do one of the 4 chunks now, and then the second chunk in a few days' time, and so on, rather than putting everything in one day.
Great advice. I think everybody's looking for answers at this point, even as we've had some clarity out of the White House yesterday. Thanos, thank you very much for joining us. Thanos Papasava is with us, founder and CIO at ABP Invest.
And coming up on the show, Germany's centrist parties reach a coalition deal after months of talks. Plus, China hits back at President Trump's tariffs as trade tensions between the two countries escalate, even as they ease elsewhere. And we'll get another take on the global trade outlook with Mal CEO Arne Franz. That conversation is coming up at 8:30 London time.
Some corporate earnings for you. Volkswagen numbers plunged for the quarter amid trade turmoil. The German automaker reported an operating result of 2.8 billion euros in the first quarter. That was down 4.6% on a year ago. Now, well short of the 4 billion expected. It confirmed full-year targets, but with a caveat saying they excluded the possible impact of tariffs as it was too early to calculate that impact. VW has ceased shipments to the US from Mexico and is holding vehicles from Europe at its port, which seems like a welcome development now as we hear the tariffs have come off. So.
To some extent, but the 10% is still in place. So let's not forget about that one. And on cars has not changed as well.
Of course, yes.
German Chancellor-in-waiting Friedrich Merz has secured a coalition deal with the centre-left Social Democrats after weeks of negotiations amid pressure from global trade tensions. Merz said the deal meant Germany now has the strength to act.
Vor uns liegt ein starker Plan.
We have a strong plan with which we can move our country forward again. The coalition agreement is the result of intensive consultations and negotiations. Above all, however, it's a very strong and clear signal to the citizens of our country. And it's also a clear signal to our partners in the European Union. Germany is getting a government that is capable of action and has the strength to act.
And Annette is joining us with more. Annette, just explain to us how big this moment is and what can we expect now that essentially this deal has been agreed upon.
First of all, this coalition contract is not a cast-in-stone law. So whatever we read in there, it's just it's what they hope to achieve. That's first of all. But of course, it's a big win for everybody, and the whole turmoil on the market has actually speeded things up and has led to the fact that the SPD was willing to agree on a couple of things the CDU didn't actually want to get rid of. So one thing is clear: what for the business world is counting is that they are heading towards lower corporate taxes. They'll slash taxes by 5% from 2028 onwards for corporates, and then also there will be lower taxes for low and medium income earners. A renowned think tank is actually saying that it could lift potential growth to 1.2%, which is of course a very positive sign given the overall infrastructure and spending package for defense. Currently, the growth rate, which is achievable for Germany, stands at 0.5%. So overall, this package by the business world is perceived as very good. And interestingly, the start to the new coalition or to the new government is a much more sober start than the last time around when everybody was so cheerful. The timeline now is that the SPD members have to vote on it, and this vote will happen until the end of the month. Then there will be a small party convention by the CDU, which then as well has to agree on that coalition contract. And probably around Easter, we know who is getting which ministry. Most likely the SPD, Lars Klingbeil, the head of the SPD parliamentary group, will be the next finance minister. So the finance ministry is sitting with those who like to spend more, which is a net positive for Germany. The CDU will stay with the internal ministry, the domestic affairs ministry, of course the chancellor, and also the economy ministry will be with the Christian Democrats, most likely. We don't know who is going to be the respective ministers yet. And by May 7, Friedrich Merz will be voted in by Parliament.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.